In the next few minutes, you will learn about a simple concept that can have an immense impact on your retirement savings, and that is diversification. Many of us have heard the phrase, "Don't put all of your eggs into one basket." Simply put, that is diversification. However, diversifying between the investment options within your retirement plan has some major benefits. The biggest one is that it reduces your overall risk within your portfolio. To illustrate this point, let's look at a great example of diversification. On this chart, each color represents a typical investment class offered through most company-sponsored retirement plans. For instance, one color represents the Standard & Poor's 500 Index, which holds 500 of the largest companies in America. This index is typically representative of the U.S. stock market as a whole and is considered a large capitalization blend category. There is also a large cap value category which invests in the stock of companies that possess a lower stock price in relation to its annual earnings, and in many cases the stock will pay a dividend. Another color is represented by the large cap growth category, which invests in stock of companies that possess a higher rate of earnings growth that may increase the volatility of the stock. We also have a mid-cap category, or medium-sized companies within the United States. Another is small cap category, which is representative of some of the smallest companies in America. We also have an international category, bond category, and finally a money market or cash investment category represented on this chart. This chart shows a 10-year time period from 2001 to 2010. During any given year, the best performing category is on top and the worst performing category is on the bottom. As an example, let's look at the international stock category. In 2001, this category was the worst performer. However, over the next couple of years, it increased and became the best performer for 4 years straight. Then we came into 2008. If you recall what transpired in 2008, our economy submitted to the worst recession since the Great Depression. Because of this, international stocks fell by more than 43%. In 1 year, you would have lost almost half of your total account balance if you were 100% into this category. 2009 entered us into a great recovery period within the market, even though international stocks only bounced back by 32%. So if you had had $10,000 in international stocks at the end of 2007, your account balance would have fallen to $5,694 by the end of 2008. In 2009, this would have only come back to $7,542 due to that 32% return being based off of the previous year's balance. So you still have almost $2,500 to make up to get back to the original $10,000. Even with a positive return of over 8% for the international stocks in 2010, your account balance would only be at $8,161. As you can see by the line on the chart here, only investing in one color can create unnecessary highs and lows within an investor's retirement plan. If you invest in multiple colors, you will be spreading out the risk of one category performing poorly, because when one category is down, others will perform better, helping to offset the effects of the poor performer. Ultimately, by diversifying your money within the different categories in your retirement plan, you will be substantially reducing the overall risk within your account while still producing solid returns over your investing time period. Over a longer period of time, the performance of your portfolio will be a lot less volatile. As you can see, diversification can produce solid returns over a long period of time while reducing the overall risk within your investment selection. From here, the next step is to choose an appropriate asset allocation or mix of investments to invest in. To learn more about this next step, please see the asset allocation presentation provided to you on the Union Bank & Trust Retirement Plans Education website. This concludes our presentation on the power of diversification. If you have any questions or concerns, please feel free to contact a member of our financial education team at 402-323-1592 or toll free at 1-888-769-2362. Thank you very much for attending, and we'll see you next time.